Lightspeed, 50% Fibonacci retracement trading. Lightspeed, 50% Fibonacci retracement trading. We are on the monthly chart of Humana Incorporation. The epic is HUM, Hotel Uniform Mike, and we want to discuss a Lightspeed 50% Fibonacci retracement trading. All right, Humana, is that the way they pronounce it? All right, put your comment in the comment section. A bit difficult name to pronounce. Humana. This is a Russell 1000 components, an American stock. And today I want to shed a bit of light on another sector that we have at a 50% Fibonacci retracement. It's a specific, okay, a price structure. All right. So when we are trading, the first thing that we are looking at is the price structure. All right, the price structure will determine, okay, the appropriate trading strategy that we must apply. All right, so if you understand that, okay, you will start slowly but gradually, okay, reducing your trading mistake. All right, the price structure will determine the appropriate trading strategy that we must deploy on that, okay, particular day. All right. So there is a price structure that I want to talk about that involves the 50% Fibonacci retracement level. So what are we looking for? We are looking for the price to go up from point A to point B. All right. And then to pull back, we don't want 100% retracement. So price went up from A to B and pull back a bit. We don't want it to come down all the way to the starting point here. We want it to pull back a bit, up to 61.8%, all right, that would be reasonable, sometimes even 78%, but we would prefer it to stop somewhere near the 61.8% Fibonacci retracement level. So that's the first condition. Price goes up from A to B and pull back somewhere, pull back, okay? That's the most important. Then it pull back, okay? The next thing that we want is this portion here, the price to go up again and to go a little bit up above the prior high, all right? So it went up from A to B, from this high here. Now it pulled back. We want it to go up now, to just go a little bit above the prior high. Just a little bit. Sometimes, I need to mention this to you, sometimes the price will stop at the same level. But in that case, we have an exception, all right? So for every rule, all right, there is an exception, all right? Privileged people, we have an exception. So sometimes you will see that the price may not form a new high, just a little bit above the prior high. But what I want you to take away today, all right, we want it to go a little bit above the prior high. But because I'm talking to you now, I need to mention to you that sometimes it will just form equal high. But just remember that we want it to go, the best scenario is to go a little bit above the prior high, okay? Now, traders say that I say okay 100 times. That's allow me to breathe in and to breathe out, all right? So I'm talking, I speak, all right? Then I say okay. I'll allow me to breathe in and to breathe out, all right? So don't get upset when I'm saying okay, or all right, okay, all right. So it's allow me to breathe in and to breathe out, okay? So here we are. So we wanted to go a little bit above the prior high and then to pull back now to the 50% Fibonacci retracement level. So price goes up from point A to point B, pull back a bit. Now it goes up again and display a new high that is not too far away from the prior high. This one. This one is very important for us. This high here, let me color it now into orange. The high just a little bit above the prior high is so important for us. That condition is very important for us. And then we want it to pull back down to the 50% Fibonacci retracement level of the price action from here to here. So this move from here to here, we want it to pull back now exactly at 50%. We don't want it to stop at 38.2%. We don't want it to go to 61.8%. We want it to stop exactly at 50% Fibonacci retracement zone. All right. that is a powerful 50% Fibonacci retracement level. So when the price pull back to the 50% Fibonacci retracement level, we are professional traders, or we want to trade like professional traders, okay? So what do we need to do? We need to implement a top-down trading method. So you may be wondering and say, George, what is a top-down trading method? Okay, what is a multiple time frame trading method? Then I will say to you, my friend, if you are serious about knowing about how to use a top-down trading method, check the video that I titled Swing Trader versus Top-Down Trading Strategy. Swing Trader versus Top-Down Trading Strategies at 24 Stock Trader YouTube channel. Digit 2, digit 4 Stock Trader YouTube channel. So you will YouTube search Swing Trader versus Top-Down Trading Strategy by, okay, digit 2, digit 4, all right, Stock Trader YouTube channel, and then you will see it. You see that video by 24 Stock Trader YouTube channel, and then you will watch the whole length of that video, and then you will understand and do a real-time demonstration of a top-down trading method, all right? So price pull back to 50% Fibonacci retracement level, we have a bullish trading setup, then we implement a top-down trading method, a multiple time frame trading method to trade it. What we are expecting is the price to form the ABCD chart pattern. Oh, George, what is the ABCD chart pattern? In that case, I will say to you, go to www.stochastic-market.com and click on the ABCD chart pattern. All right? And then you will know what is ABCD chart pattern. So, because you see the price went up here, from here to this point here, from a new high that is a little bit above this high here. Now it pulled back to 50% Fibonacci retracement level. Now we want it to go back to the point that we call point D. D for delta. Okay, the terminal zone. So this point here, that's what we call it A. This point we call it B. This point we call it C. And this point we call it D for delta. So Alpha, Bravo, Charlie, Delta. A, B, C, D chart pattern. What we meant is that the price action, the length of the price action from here to here, we want it to be. So when we are setting our target, we will use the length of the price action from here to here, and we will project it to this point here to set our target right there, expecting the price to form equal, okay, price action, okay, A, B, C, D. Very powerful 50% Fibonacci retracement. So when I use the word powerful, sometimes trader will try the method for the first time. If it doesn't work, they mark the video down and say, George, there's nothing powerful about this. All right. That's okay. All right, that's okay. We are on YouTube, we are friends. So what you need to do, all right, so you learn something for the first time, all right, try to use a demo account, practice with it, test it, keep your eyes open, all right. If it doesn't work the first time, okay, don't relax, okay, relax. Go back again, work on it. So remember, this is not a trading signal, it's a trading setup. You have to implement a top-down trading method without ignoring the economy news and the fundamental. So what we do, we draw a line there. So 50%, we draw a line there, that's a warning line. So we say priority to bullish signal above, a priority to bearish signal below. And then we implement a top-down trading method to trade it up, okay? So price goes up from A to B, pull back, okay, from a high here. Now it start going up. We want it to go up a little bit above the prior high. So traders that have been following us before, what I will say to you also is that we do not want this high, this new high that is just a little bit above the prior high. We don't want it to go above the 138.2% Fibonacci extension level of this price action here. I just want to mention that we don't want this high to be above, okay, the 138.2% Fibonacci extension level of this price action from A to B here, okay? We don't want it. We want it to be just a little bit above the prior high here, and then to pull, okay, and then to pull back to the 50% Fibonacci retracement level. In that case, we draw a warning line and we implement a top-down trading method, expecting the price to form the A, B, C, D chart pattern. This is a Lightspeed 50% Fibonacci retracement trading. So we have on this chart here, you can see that the price went up, okay, look carefully. Price went up from A to B, yes or no? Okay, from a high. If you are an investor or swing trader, position trader, this price structure is so important. You must learn to master it, okay? So here it is, it pulled back. So we just want it to pull back, okay? We don't want it to come back to the starting point. That's the most important thing. Now we want it to go up from A to B and to go a little bit above the prior high. Okay, you can see that it went a little bit above the prior high, just a little bit, tiny, a little bit. Yeah, this, we are comparing this high to this one here. Now we want the price, so this point here, this is the point that we are calling the A, and this point that we are calling B. Now we want it to pull back exactly to the 50% Fibonacci retracement level of the price action from here to here. Okay, let's apply Fibonacci retracement to this section here. Where is the 50%? Here it is. Can you see? It's written. You see the line that I draw? Below that line, you will see 50%. The top line is 38.2%. The line below is the 50%. The second line, you see here, that's a 50% Fibonacci retracement level. Let's call it in turquoise. Turquoise. Here it is. The 50% Fibonacci retracement level. We want it to pull back to 50%. Now, at that point in time, we draw our warning line. So what we will say to traders, priority to bullish signal above the level of the price level of 63.28. Then we will apply a top-down trading method. Sometimes you can see that the price start going up first. We have a monthly chart here. It went up a bit and then pull back, and then went up again and then pull back. So remember that the price does not go up in a straight line. So that's why we use a top-down trading method. So sometimes trader will lose. Sometimes you enter a trade, you are taken out. It doesn't mean you are wrong. All right? Sometimes the market may take you out. It doesn't mean you are wrong. All right? And then you wait to see, has anything changed? If nothing has changed, okay, you shake yourself up. Okay? All right? You apply 5% money management rules. Okay, you are still in the market, you come back again. Some trader will use option, call option to buy to avoid all the blah, blah, blah. And hopefully they will get paid before the time expiration. All right? So you can see that price went up, pulled back, went up, pulled back, and then boom, it went up. So what am I talking about? I'm talking about ABCD chart pattern. We want, what you will do, you measure the, I'll move my Fibonacci retracement now. We want the, you see the line from A to B. Sometimes it's not easy to use that. You will do like this. Okay, so you see the pullback, you project it, and you set your minimum target somewhere here. You see, somewhere in that zone. A, B, C, D. You can see the price went above the prior high. We can also use the magnitude of the price action, which means the height from the lowest point to the highest of this price action, and you can project it just like this, bringing it exactly to the same level. The price goes above the target, you project it up again, and then you will set also the midpoint. So this will be, double portion of your target. So first target, it breaks above it. Next target is this one here. So you can use, okay, the magnitude of the price action to project it, okay, at this point in time to set your target there. And if it goes above it, you project that target to that level there. You see, that's exactly where the price did stop. I don't think that I need to mention to trader about the Lightspeed 50% Fibonacci retracement trading is a specific price structure. So trader who understand, okay, Elliott wave will know that we care about the price structure, how that pattern form. This is what I'm trying to explain to you. Because if you don't know how the pattern is formed, you may make a mistake. Once you go from A to B, pull back, then it goes up from here to here, goes a little bit above the prior high, and then pull back to the 50%. It's a specific price structure. Now, price must form a new high a little bit above the prior high. In fact, in the language of Elliott wave, we'll say an Elliott wave cycle is completed. Now a new cycle has begun. That cycle will become truly bullish if the price breaks above the 138.2% Fibonacci extension level. So what am I talking about? Okay, because I don't want the video to be too long. I talked about this already at 24 Elliott Wave YouTube channel, and I don't want to repeat myself again. All right. So the point I want to make here, all I'm saying to you, we don't want this new high that goes above the prior high to be above the 138.2% Fibonacci extension level of the price action from here to here. So if I apply Fibonacci extension to this price action here, I will highlight the 138.2% Fibonacci retracement level of the price action from here to here. I will highlight the 138.2% Fibonacci extension level. That level is right here, okay? Because I want to wrap it up now. I'm going very fast. You can replay the video so you may understand what I'm talking about here. So I don't want this second high to go above it. That will nullify the price structure. Shouldn't be above that high. All right, so you get it now. So I'm not going to say it again, okay? Some traders get it quickly and they get as I say, Joe, you are repeating yourself too many times. But do this for some traders, okay, slow traders, new traders, so they may understand what we are talking about here. So we talk about using the length of 4K, the price action here, to set our target. We can also use the magnitude of the price action from the lowest point to the highest point to set our target. But one more thing I need to mention to traders is this, okay? Pay attention. All right. As the price pull back to the 50% Fibonacci retracement level, there are levels that you must watch. The first level that you must watch is the 161.8%, though we can use, as I show you already, how we set the target, but I just want to quickly mention that to you. You must watch the 161.8% Fibonacci extension level of this price action from A to B. You must watch that level. You see some trader will take profit there. See this candle here, 161.8%. Another level that you must remember is the 214%. That's the level 214% Fibonacci extension level. And the last level that you must remember is the 261.8% Fibonacci retracement level. In many cases, as you see this price structure forming at 50% Fibonacci retracement level, very often you'll see that the price will go all the way to 261.8% Fibonacci retracement level and before coming down. This is what has happened exactly here. So that level of 261% level usually is a very excellent target, the greediest target for bullish traders or for bearish traders that are selling in a downtrend. 261%. But there are other levels that I don't want you to ignore. 161.8% Fibonacci extension level and the 214% Fibonacci extension level, the ultimate target at 261.8% Fibonacci extension level. This is a Lightspeed 50% Fibonacci retracement trading. We want the price to go out from A to B and to pull back and then to start going out from another point A to point B, forming a new high that is a little bit above the prior high. Now we want the price to pull back, the financial instrument to pull back exactly at 50% Fibonacci retracement level. All right. The reason is what is happening. In fact, let me clarify that with you once and for all. Is that the price from a new high, so trader will be thinking of a bullish breakout. Yes or no? So here you want a little bit above the price high, so people think it's a bullish breakout. But for one reason, people sold it because it's still below the 138.2% Fibonacci extension level. So if you want to know more about why I'm barking about the 138.2% Fibonacci extension level, either you subscribe to Day Pro Trader YouTube channel and watch all the video about 138.2% Fibonacci extension level, or you head to our website dayprotraders.com and click on the 138.2% Fibonacci extension level. So because the price is still below the 138.2% Fibonacci extension level, professionals want to sell it. So as they sold it now, the bullish breakout has failed, yes or no? So it's now coming down. But remember that the 50% Fibonacci retracement level is a thin, T-H-I-N. Is my accent very clear? T-H-I-N, thin dividing line between the bullish zone and the bearish zone. All right. So as the price goes above the prior high from a new high, people sold it down. So we have a breakout failure. Okay. But as the price pulling back, the price found a support exactly at 50% Fibonacci retracement level. We are still in a bullish zone. So therefore, we are on the edge of the bullish zone, which is the 50% Fibonacci retracement level. So therefore, if the price found a support there, we implement a top-down trading method to trade it, expecting the price to form the ABCD chart pattern. All right. Specific price structure. All right. So remember that specific price structure. So we are not talking about 50% on its own. A specific price structure has been formed with the 50% Fibonacci retracement level. Then we apply this strategy. As always, if you have any question or suggestion, put in the comment section. Well, I read all comments, and in due course, I'll record another video to answer your specific question. Happy trading to you all, and I speak to you soon. We are the TSTW24 traders talking about Lightspeed 50% Fibonacci retracement trading. Happy trading to you all, and I speak to you soon.